Hi guys, this one is more geared towards our current subscribers, given the couple of trades that we've been speaking about, especially in the subscriber section. But ultimately, this is also to recap, I guess, in terms of some of the things that I've put out there over the last year. Um, some of the trades that I've been gearing up. As you know, I'm a longer term trader. I'm looking for weekly, even monthly in some instances, moves on the 3 to 4, and then basically take in the 4 to 5 on a monthly or a weekly time frame with daily entries 0 to 1, back to 2 pullbacks, and ultimately going. And I've just found over the years that's really the better risk, for me. So this is ultimately what we teach in our Discord server if you're not actually a subscriber or a member at the moment. So what I'll do is I'll just go back now using TradingView. The beauty of TradingView is that this information is publicly available. These posts cannot be edited, etc., etc. So if you go back through my profile in TradingView, which is basically Mayfair Ventures, you'll see here. Um, I'll probably put a link into the description as well, on this particular point. So when we start off, what I wanted to do was to show, first of all, some of the plots. This goes back to, April this year. But what I've done is I've gone through the pages and I wanted to show specifically the gold trade that I've made the video on recently. Some of the other pairs in terms of Euro USD that some of the guys in the chat are obviously trading. And for me, one of the reasons I'm really stalking Australian dollar USD. And then to finish off with, we'll go into Bitcoin as well. So I'm going to leave that one more towards the end. I know it's more relevant given the crypto conversations we've had, the streams Paul is actually doing at the moment on TradingView. Yeah, so let me start with this lot, right? So in essence, starting with something like Euro JPY, for example. Now, what I was looking for, this is obviously a 1 week chart. Looking for a 1-2. I haven't put any form of extensions. This is something that, going back into these, I've actually mentioned when I was posting these that I would plot some of the extensions up high, and kind of come back and add these in as I kind of follow them through. So clearly the extension levels were a little bit higher than where we currently were. We hadn't quite tagged the 168. So I was expecting 3 to go a little bit higher on this one and then drop down for 4. So going all the way back from April, 3 did actually come quite a bit higher than this. But again, part of the benefit of not trading these moves from, a 3 to 4, or anticipating the end of a 3 move from 2, means that, I'm comfortable. We're sitting in this particular trade saying, okay, I'm not ready to enter yet. I'm analyzing, I'm kind of gathering data. Clearly, this is moving now for my 4. So I'm on the assumption that 4 is there or thereabouts. Something like GBP USD, again, this is on a monthly plot, this one. Middle little note at the bottom of this one. Again, not a major fan of the plot on this one. There is some confluence with the stochastic. So I'd like to see a 4 move again playing out. And I've talked about it in a couple of the other streams, the value area and what the March 2020 candle did to a lot of these particular pairs. So at the moment, I wasn't a fan of this particular move. We took up nearly another high, and then back down for 4. So for me, 4 moves across, and I can start looking for some more specific entries now on the smaller time frames. As I said, this is back to a monthly time frame. So I'm quite happy with that at the moment. Into some of these other pairs again, Euro USD. Now, if you look at this one, this is something that we've discussed quite a bit in the group. I know there's a couple of guys looking to trade this one as well. So for me, a 3 to 4 move, and we now need to see whether or not this is coming into the daily 1-2. So if we assume that the 4 was actually in, and this was back in April, we would have now looked to measure the impulsiveness of this particular move. We've got a pullback, which is possibly 90%. It might have actually taken, if this has taken this one out, then this gives us the new 4, and therefore we've had an A, a B, and a C move. If we've got that and it hasn't taken that out, and we're on the weekly time frame, then my assumption would be this was the 0, this giving us the 1 up high, back down for a 2 on the daily time frame, and therefore 2 up to 3 is the next obvious move. So this is the type of thing that we cover in. This is the type of thing, like I said, I've been stalking these really all the way from the start of the year. A 3 to 4 move on USD JPY, you can kind of see the logic by now. The idea was, the move down, and therefore, again, if this was the 4, we're probably seeing a 0 being the 4, up then to the 1 on the daily, back down for a 2. And then the assumption would be looking at the stochastics, looking at the kind of key areas levels for an entry on the daily. So again, quite confident with that. I see some weakness coming back into the US dollar shortly. And on that particular topic, I'll jump into what I was looking back at September 2020 in terms of the DXY. So clearly we were looking for some strength up on the 4, which was giving us the fullback. And then this particular pullback down is ultimately what I'm looking for. So again, I would like to see a 5 come down lower. I'd like to see it take out, obviously, the extension levels on the Fibonacci move. So I don't think we've actually got the final 2618 of the much bigger move yet. And this is what I'm still in the process of seeing this complete. So I'd like to see it drop down probably around 87, just a little bit below. And this takes us back, practically a year with 11 months into this move. So that's basically what I'm looking for at the moment on the DXY. So what I'll then do is I'll just touch now on the gold side of it. And on the gold side of what I'm looking for, um, basically the main idea for the gold part of this is coming all the way back. Let me see which one was first. Coming all the way back to January. Okay, so in terms of the first one, January, I was looking for the move down into this weekly, basically liquidity pool, if you will. And the idea was that we would come on down and then basically spring off this up and away. So the idea of this was, we come on down, we touch in the liquidity pool, we've near enough touched the bottom there. So we've moved up, which gives me basically the 0 to 1 move. We've now pulled back for the 2 move, which is 1 to 2, obviously. And therefore, we've got an a B pullback, and a C on the weekly time frame before ultimately this moves on up and away. So that was the first one back in January. Back then on this one in March, this particular move gives us the double bottom, if you will, before again moving on up. So the assumption was from January into March, the move back down, which was, although I've drawn this as a little move, we clearly had a bigger rise than expected, but that bigger rise give us a much bigger impulsive move away. So I think the clear point was using these liquidity levels in conjunction with the stochastic and knowing where we are on the Elliott map, then it's obviously quite a nice feeling watching these things kind of play themselves out. GBP, JPY, similar type of thing. This is just more to kind of show you guys, obviously your current subscribers, um, what actually I'm looking at, why I'm looking at it, and it's this type of power that you've actually got in terms of these moves. So, when you see I'm calling the short moves up from here, obviously a little short there, you can see these shorts, this short was still playing out. Although I wasn't trading this one, this was just keeping, kind of myself, I guess, kind of active in terms of what I was looking for. We clearly had a 1, a 2, and this 3 move in the bigger picture. Obviously, longs called near in this, looking for what we were looking at as the liquidity levels. And then the idea is obviously coming back down for a 4. We've dipped a bit lower in the 4 than I would have expected, but again, you can see directly on to a 786 on the Fibonacci level. So quite a deep retracement for the 4. And then up and away it goes. So the logic is pretty much the same, guys, all the way through, regardless of if I'm trading gold or oil or anything like Euro JPY, GBP JPY, Euro USD, USD JPY. I do tend to stick more towards some of the bigger pairs. I find a lot more respect in this particular style. Now, again, going back, almost a year, and this one's just kind of 10 months or so, you can clearly see the idea on the calls that I'm making on moves like this from the one down to the two. Look, although I wouldn't technically trade this one, the idea was just to show, where we are, and for my own peace of mind before I actually go out and take these kinds of trades, being on the four. So for me, the entries would have been on the back of this, to obviously take this one then long. So the logic is pretty much the same. You can see we've just dipped down under my entry level there. You do see this every now and again, just kind of suckering in more shorts on the assumption that this is a continuation of the downtrend. But it's just something you get a feel for over the years. And obviously, the more you see it, the easier this becomes, and the more you use these techniques, like I said, stochastic, with our false bar, and now we've obviously got the volume painted in there as well. So you'll start to see more and more kind of enhancements on this. And when you start to appreciate these liquidity levels in conjunction with what we have with the Elliott moves, it'll start to make a lot more sense for you guys. Okay, Euro USD on a Wyckoff schematic. Now, this goes back again similarly to what we've already covered. Clearly seeing the move, we've got the liquidity levels, the preliminary support, the AR moving in. So I've marked this up pretty much as a Wyckoff schematic to take this short. Now, part of the short is straight back down and into some key levels that we have down and around here. Look, so these levels come back into where we are at the moment, and why I'm actually looking at this being the four move, so 3 to 4, and then taking this one long rather than short, because of the weakness coming into the DXY. So, okay, let's go into the Australian dollar. Now, this one is one of my preferred moves overall, and I'll come into this kind of step by step. So again, not trading this one at the moment. I'm actually looking for the entry on this one, and the entry is pretty soon, if I'm honest. So going back November, I was looking for the move up ultimately up to 5. So we've got the move up to 5 and smashed all the way through 5. So for me, this was part of a much bigger move, and therefore 5 would have been an ABC correction in this move here, and then given us another move, which basically is given us the 1, 2, 3, 4, and 5 again. So this particular 5 being possibly the 3 or the 5 of a much bigger move altogether. And all we're seeing at the moment is a pullback to the bigger 2 or the bigger 4, depending on where we are. So that was going back to November. I've covered this in the much bigger move. So this comes into January now, which means that the move that I was calling was a bigger weekly move based on then the daily. So I wanted to see the daily down to 4, and this 4 has been a very, very drawn out 4. As you can see, this is one of the reasons that I've been stalking this and not trading it, is that the 4 hadn't been complete. I don't feel that it's complete yet, if I'm honest. I kind of feel that there's a little bit more. We've got a nice ascending channel sitting at the end here, and therefore I would like to see another little test, maybe touching the bottom. We might grab some liquidity underneath this level over here. But I'm looking at this one quite closely. So you can see some of these moves, all the way from January. This is, 8 months. I've been sitting on my hands waiting for this particular trade, not stressing about it, knowing that we are about to set up. So, it's one of those things. January. So again, this is now on a smaller time frame. You can see this is actually a private idea. The general idea for me with doing some of these private ideas and playing around with small time frames is that I'm keen to kind of keep myself active on the charts, even if I'm not actually trading these. And therefore, the general idea on this one was to see a move on up to this little orange zone ultimately, which we had a nice little move down. Didn't quite get as far as I would have liked on a smaller time frame, but the longs and shorts, we come in through, we've pinged off these little areas of resistance, before ultimately moving on down. So the long move was actually there. Again, I could trade this if I really wanted to. I'm not really a fan on the smaller stuff anymore, and therefore I'd rather reiterate this on the bigger time frames. The monthly, weekly, going into the smaller ones. Then just in terms of the entry themselves. Um, Again, 4 hours, just again, January, the end of. So you can see just playing around with what I was looking at, why I was looking at it, some short calls on this. This is giving me the first move back up on the bigger time frame. So again, this is now only be in the daily. So just kind of playing around with the chart is what I'm doing kind of in my downtime. Um, and in this one, I guess February. So we moving on, still stalking the hell out of this one. Um, I'm kind of keen to watch this come back down to the 4, which is what I've got the golden target. And as you can see, this is something I cannot edit or cannot change. Back in February, my golden target is what I was aiming for, and only now we coming into this particular move. So I'm quite comfortable on this one. I know that I've got a little bit more to go before taking it, and then this is an entry for the long time. So what I'll do now is I'll just check in terms of where we are. So we're about 16 minutes in. And then basically I'll come on now into Bitcoin. I know this is something that many people will be waiting for. So what I'll do is I'll actually put this as a chapter in the video itself, and see if you guys want to skip forward to it, then fine. So um, back in January, you can see the current price, 32K. I was looking at this being a Bitcoin reaccumulation. Um, Again, just highlighting, I have 20 years of experience in the trading side of it. I've been a Bitcoin holder since 2011. So yeah, crypto kind of long time, trading even longer, and just wanted to share some of this experience. So what I was expecting on this move was, clearly we all know what happened in Bitcoin. We had the reaccumulation on the smaller. You'll see this on the daily and the 12-hour charts, and we ultimately moved on up. So you know, this is I'm very bullish in terms of crypto as a whole, but I also know that from experience, a healthy pullback is sometimes what's needed to kind of revamp the price before shooting off again. Now, going through the post that I've made, one of the things that I found quite interesting, somebody had asked me to find some trades that I'd taken last year. So hence the reason for putting gold at the start of the video. SPX was a big one for me last year. I took a New Zealand dollar USD trade last year, which was quite a big one again. The general idea is to take less of these trades and just kind of scale into the winning trades. So in terms of Bitcoin, coming back to the point, I tend to mark up things that I find relevant for the future. And I come back to these using the assumption of, Elliott and Wyckoff and so on and so on. Now, once I've got these liquidity levels in conjunction with my Elliott and using the stochastics or the quadratics or even the regression in some instances, I can combine that with some volume, start to get some character traits of the actual pair. And this is one of the reasons I've really dialed down the types of pairs and the number of instruments that I actually trade. So I'd rather become more of an expert in 3 or 4 instruments. And although these techniques kind of work anyway, I've just got a bit lazy in terms of trying to analyze 15 different pairs and using 20 different indicators. Less is definitely more. I tend to only keep the stochastic on my charts at the moment. I do like the quadratics and the regression and a couple of others like the heat map, just to give me a feel for where they are. But I tend to mark things up using those and then turn the indicators off to actually just kind of keep a pretty clean chart. So in this particular instance, I was seeing a nice little pool sitting over here, and I know this is quite hidden. Again, something we teach within Discord, um, and this was something, an area of interest for me, a key level. So the expectation really was that we would move on up this regression channel until we breach it. And when we breach it, the preliminary target was going to be this orange level, and the ideal liquidity target based on this one candle over here back in January would give us basically the 26, 27, 28 kind of level as a little bit of a range. So clearly we moved up in this regression. We used the regression as a nice little bit of support here until it was breached. We then had the breach back down to the 2011 low, from the extension, sorry, from the low. So it's 2618 extension, which means it's quite a key area. You can see it used again here. And then basically all the way down, now capitalizing on this little consolidation cluster. And I would like to see it dip down below just because of the liquidity sitting over here. But we've obviously moved back up from this, and you can see this almost hugging this value area. So this value area was actually drawn out in February this year. So you can see the respect that we have in all the way from over here. And we've now moved on up. So for me, there's nothing really bullish until we move over the 51,400 level, giving us kind of confirmation that the character is ready to go long again. And therefore, my assumption is that this particular range right now is not looking too impulsive, giving me a little bit of feeling that we're going to come back down, or at least try back down to this 36k level. And if we do, then the assumption would need to be that we've had a 0 down here, we've had a 1 maybe up here, a 2, a 3. I mean, this could be 4 and 5, which means if this is a 5 move, this giving us the 0 to 1 in the bigger time frames, then the 0 to 1 bigger time frame, we are now looking at a 2. So, worst case scenario, we only come down to 36. Best case scenario, we break through the 36 back down to create a slightly lower low, collecting some liquidity around the 27k. Realistically, you're talking $14 short of 27k. So yeah, I'd like to see that as the next move. Then this was the one that I suppose most of you guys, especially the subscribers, and even I guess the guests in the Discord channel, you guys will be familiar with this particular post. I was looking for the A, pullback B, and then down to C. Now, already knowing what happens here, we had a clear bounce off A, which was perfect. The B actually came up a little bit higher. Now, what I realized in this was I've used the 8-hour block rather than the daily block, which was a little bit frustrating because this would have been the perfect structure and setup and playout if you watch this. And therefore, I'm going to play this forward, and you can clearly see we had the bounce down to A to the pip, the move up to B, which for me was from the top there at 62,000. We had 2,500 more than expected, and the offset from B to C meant that we actually had the C 2,500 up on this level. So the levels were right. It was just the wrong block to start with, giving me the pullback for this particular move. And therefore, the overall play being around 30k, I think 28, yeah, what's that? 28.2 being the center level was the perfect assumption for the E. So this again back in March, and why I was calling what I was calling. So now it's a question of, are we fully at the bottom? Are we going to get another one test of this, a deep 2 retracement? Because again, if we assume that this being the one, we might come all the way back down, and we could easily come 34k before taking off and going up properly. So that makes a lot of sense to me in terms of thinking like the composite man, understanding what the institutional players are looking for and where we are within this bigger Elliott cycle. So just to finish off with, I'll just cover quickly the Elliott cycle and where we are. So March the 26th this year, I posted this particular post talking about the weekly 3, and if we still assume that we are weekly rather than monthly, although there is some arguments for the monthly, I would like it to be, I think, where we are right now. If we are the monthly 3 rather than the weekly 3, then I think we are going to get a deeper move back down, to potentially a newer low before moving on up. So the assumption at the time was daily 5, weekly 3. And like I said, there's nothing saying that we couldn't be a daily 5 inside the weekly 5, giving us the monthly 3. And that's the only thing that I'm still questioning with myself at the moment as to where we are, why we're where we are. So the assumption was back let's click on this one. So the assumption was back on March the 26th, you can clearly see the idea was a shallow move would have given us 45, a deeper move would have given us the 28 level that I was expecting on these kind of moves. And, as I said with the Euro JPY at the start of this video, sometimes you get these to go a little bit deeper and obviously overshoot the move slightly higher on the way up, specifically to catch new liquidity levels, I guess, new traders moving into positions where the assumption is, hey, this is now short, and it goes a little bit further than expected to then shoot back the opposite direction. So if you look at this, the idea, like I said, was down to this drop, somewhere in this range for a 4. We can use the Fibonacci extensions to get these kinds of levels. I can see where the liquidity pools are, something like I said, we teach in the Discord. And therefore, on this particular move, let's see how this one's playing out. You can clearly see this move in conjunction with this was giving us exactly what's happened there. Look, we've come into the range, exactly to the range. We've nearly left the range, but as we were leaving the range, we've actually been rejected from the range. So this again is giving me a little bit of confidence as to why I don't feel the 4 is actually over yet. There's a lot of accumulation to go on to take this to all-time highs. And if we are going to move up to, 87, was 87 roughly to, I can't even see what that one is, 87 up to around 97, then I think we might see an overshoot, maybe 103, and then another move down for a bigger corrective move on the monthly, if we assume that is the monthly. So, options are still there. I'm looking for confirmation to take this long, or I'm looking for a better entry down low if we can assume that the 1-2 is in on the smaller time frames again. So, that's really what I'm seeing right now. Hopefully, this summarizes, my vision, where I've come from, why these moves, why I'm stalking the Australian dollar, and basically where we are in this roadmap right now in terms of Bitcoin. So, yeah, have a great weekend. Have a great next week. And hopefully we'll be in the Australian dollar trade soon.